Hello, my name is Mike Swanson. You're listening to the Wall Street Window podcast today, available on YouTube. Odds are you're actually listening and watching this, though, because you're on my email list. I got an email from me telling you it's there. If you're not on the list, then click the link associated with this video and get on it to get my daily updates. But today I'm speaking with Jordan Roy-Byrne, who runs the website, thedailygold.com. How you doing today, Jordan?
Hey, Mike, I'm great. How are you?
Oh, I'm doing very well, and thanks for taking the time to talk with me and in my audience of people out there. You're one of the most astute people I know when it comes to analyzing, understanding what's going on in the trends in the gold market. Gold is up today. I'm happy because I own gold, I own silver and mining stocks, but it's a little confusing too because we had a giant inflation number before the opening bell. Yeah, gold is up, no surprise there, but bond yields are going down. Treasury bond yields are going down. The stock market is up today too. So just based on higher inflation, I think yields ought to go up, but they go down. The Treasury bond 10-year bond yield is like 1.5, and inflation now is 5%. It's crazy. I don't understand it.
Yeah, well, I think there's a couple things. I mean, as you know, markets discount in advance. So markets look ahead, they anticipate, and we've had this huge move in all the inflation trades, which is more so the other commodities than gold. And if you look at things like bond yields, as you noted, there's some indicators you can look at, like you can look at TIP against TLT, which is like the inflation bonds divided by regular bonds. You can kind of use that as an inflation indicator. You can look at things like the US dollar, the gold silver ratio. So these things are potentially pointing to a period that could be a counter trend period where maybe we see inflation investments take a breather, perhaps. So I think that could explain why you have the divergence between the news and then the market reaction with respect to bonds and bond yields. I know that you've been analyzing markets for decades, Mike, so that's something that you can understand.
Oh yeah, sure. It's just when you look at the daily move, it is so confusing, and so many people now. That's all they focus on is what happens every single day. But what's your outlook? We had a great rally in gold last year after the stock market, crashed basically, but then gold went sideways and drifted down and made a double bottom this March and April. It's been going up ever since. But do you think this move can continue? So few people, at least in the United States, are in it. If you look at things like Robinhood, where not many people, all the top 10 positions in Robinhood are tech stocks and AMC, not gold stuff.
Yeah, I think we could have a little bit more upside. I'm looking at just gold and GDX and GDXJ, and I'm seeing, with respect to gold, I do see on the daily chart there's resistance around 1920, 1950. So I think it's possible that we could punch up to the upside a little bit more in precious metals. Same thing with GDX and GDXJ or GDXJ. The juniors, that ETF is trading around 54 right now. I do see resistance at around 58. So it's possible there could be another leg to the upside. But I think, looking at more from a bird's eye view, I think that for precious metals, we're going to see over the months ahead consolidation. In the big picture, I think it's going to be bullish consolidation, but I would not be surprised if we saw range-bound activity, volatility coming down, because remember with gold, we had a 20% correction, which is pretty significant, and gold has rebounded. It's regained a lot of those losses, but you get a big correction, and then you get the rebound into resistance, and then after those things happen in a market, you typically see a grind after that. You see consolidation. So that's, I mean, I could be wrong, but that's my sense of where things are going over the coming months. More correction and consolidation. But on the whole, I think it's going to be bullish consolidation for gold and precious metals, which eventually could lead to the next leg higher that could start sometime perhaps at the tail end of this year or maybe early next year.
Well, one thing that's kind of interesting is, we both of us been following these markets for a while, for a long time, and there's times when gold stocks almost move, in sync with gold, which is what you'd kind of expect. But I'm noticing a lot of the small cap stocks almost are moving on their own. Like I can find ones that are up a lot on a given day and some that are down a lot, and it doesn't seem to matter what's going on with gold or silver. Do you think that sort of thing can continue, or what's even causing it?
Yeah, I think it can continue. And I think with respect to the larger stocks, I mean, I think the smaller stocks eventually, but with respect to the larger stocks, look at a chart of GDX divided by gold. You can look at GDXJ divided by gold. In the last couple of weeks, I've done an article and some videos on this, Mike. If you look at the GDX to gold ratio, it's setting up for a potential huge breakout above an 8-year resistance level, which is like kind of it's been basing, kind of bottoming for 7, 8 years. So GDX breaking above, relative to gold, breaking above that 7 to 8 year resistance, it's pretty close to doing so. And that to me is going to be a huge sea change. And GDXJ against gold, by the way, it looks pretty similar. It's just a little bit behind GDX against gold. But let's just presume that these things are going to break to the upside. It's going to usher in a massive sea change, Mike, because we have not seen gold stocks outperforming gold strongly and consistently since the early to mid 2000s. I know you're very familiar with that period, but yeah, you have to go back 15 plus years to find a period where the gold stocks were outperforming gold, consistently. I mean, yes, we've seen it at various times in recent years, but it's only happened for a 6 or 9 month period. But I mean, on a consistent basis, it's been 15 plus years since we've seen that happen. So that's going to be a massive shift with respect to the psychology of people investing in the sector. Because if you look at generalists, yeah, so some of them, yeah, occasionally they've invested in gold, but they look at the gold stocks and say, no, I can't invest in that. These things, they're underperforming gold. These are bad businesses, et cetera, blah, blah, blah. But we are going, again, looking at the chart, we are going to see a massive sea change when these ratios break out. And, to circle back to your question, I think that's what we're starting to see. Because if you look at GDX is going to get to its high before gold gets back to its high. Newmont has already made a new high. It surpassed its 2020 high. So I think that gold stocks are going to lead the next move in this sector. They're going to sniff out the eventual big breakout in the gold price past 2070 or 2100 resistance. And I just think that the market is slowly going to discount that, and the market's rewarding juniors, who have great drill results and great projects, and it's obviously also rewarding companies like Newmont that are positioned to really outperform if after, or I'd say, before and when the gold price breaks out.
Well, I'm going to try to simplify what you said. Tell me if I'm missing something, though. But for someone who's just getting into this, basically the implication would be, we've seen gold stocks go up, but these ratios that you're speaking of break out, the GDX to gold ratio, that would imply that the gold stocks are going to go up even more at a rapider rate than we've seen, fast enough to get the attention of people that say they got Robinhood accounts to want to start buying and chase that type of action.
Yes, that's exactly right, Mike. And that yeah, it looks to me like it is going to start happening, within the next 6 to 9 months, I think. And that's going to be, I mean, it's going to be hugely significant. Yeah, it's going to pull in a lot of generalist investors who've ignored the sector and have completely ignored gold stocks.
Well, that would be a sea change for sure. But what do you think would be the best type of, let's say, juniors to pick out in such an environment? As many of them have already seemed to like they've gone up quite a bit. Some of them, at least.
Well, with respect to juniors, I think there's two answers. The first answer is for me, like I'm looking at quality. I'm looking at the economic potential of the mines that they're currently operating or the projects that they have. And so that's where capital is going to flow initially. The market is looking for, the economic potential of the projects that these companies have. And so I think quality will outperform first. And you're already seeing that with stocks that are juniors that are outperforming. They're making new highs or they're breaking resistance levels. Those are kind of the cream of the crop. But I think eventually stuff that is, I don't want to say low quality, but stuff that is just not as high quality, that stuff is going to get a bid as well. It probably after gold breaks out. Because getting back to the market liking economic potential, I mean, if you have 3 to 5 million, you have a 3 to 5 million ounce project with okay economics, that the gold price moving from 1,800 to 2,400 or 2,500, that makes a massive difference for those types of companies. So I think looking at things that could benefit the most from a big move in the gold price, it would be those types of plays. Companies that have 3 to 5 million ounces, their projects don't really have that many flaws, and with a move in the gold price, they'd suddenly gain a significant amount of value. So that's how I look at it. First, go for quality, and then second, look for things that maybe they have a couple flaws, but they're a really, really good value, and that value could increase significantly from gold breaking out.
Well, I'm going to be looking forward to that. I can tell you that for sure. It's me. I know you got to go, so I'll ask this. I guess is the final question. It's been a while since we spoke and have done an interview like this together. But I'm on your email list. I follow your information much more closely or frequently. So for people out there who don't want to wait, for maybe possibly another couple months before we do another interview like this, how can they get more information from you?
They can go to thedailygold.com. They can opt in for my free book there at the top. They can get on my free list. And I send an update every week. So yeah, I would say check out the free list. I also have, I'm giving away a report on my top stock pick. I think you can find that at thedailygold.com/top stock pick. So that's a sample of my work, a free report on my top pick for the next 2 or 3 years.
Well, thank you for taking the time to talk to me and everyone else. We'll do again soon.
My pleasure, Mike. Thanks for having me.